Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, February 26th, 2009. Well folks, we're seeing a little whipsaw intraday action in the markets today. We initially started out higher, we sold off a little bit, and then we actually rallied higher to a double top or triple top. I'm going to show you exactly how you knew that was coming into play. In addition, I want to show you why the market's bouncing here, because there's a lot of technicians out there, the weak-handed technicians, the technicians that focus on what everyone else does, the stochastics, the MACD, the RSI, and try to do that type of technical analysis that don't focus on trendline analysis. And those players are going to think that the market had broken down here, and they're not going to understand why the bounce is coming. Because a lot of them would be going short here, because look, it closed below the 200. But I'm here to tell you exactly why that is, and why it's so important to understand technical trendline analysis. You have to do it. It's one of the least understood arts out there, and it's one of the most important. Why? Because everyone, if you take all the traders in the world, I'd say about 30 to 40% are technical traders. If that much. Of those 30 to 40%, 1 out of every 100 is proficient in technical trendline analysis. You do it, it's going to work. And that's the key, is that when no one knows how to do it, that's when it works. The few that know how to do it profit immensely. I'm here to give you guys these videos to showcase, obviously, our talent, so you hopefully sign up for the Research Center and to learn more, or our webinars and so forth, but also to educate you guys. I'm all about educating, and the key is, guys, we're all about showing, how to avoid the Wall Street hype, and this is exactly one way. So let's get right into it here. What I want to show you is take this low, and this is the same trend line. Guys, I stress this trend line so much, all right, so much to you guys yesterday, and I said basically if this market can hold this line, you'll see more upside. That's exactly what I said, and what I'm going to show you here, and we'll line that up as best we can, is why it's true. Now, you can see this trend line extends, and look at this, guys. You came right into that, and that's why you broke below the 200 there, is because this trend line had to be tagged again. And this is the same trend line I said yesterday. As long as you hold this trend line, you're going to go higher. Sure enough, yesterday what happens? Bounces, pulls back, bounces, goes higher. Then we get that 330 sell-off. Then you rally higher to a double top, after a WV pattern, by the way, so that's the completion of the move. You retest that high, and now you're retesting that low. But my point is this: a lot of amateur or technicians that don't necessarily understand how to use trendline analysis techniques are going to think this is a short because it closed below the 200. They're using basic moving average support resistance. Not true. On this level is going to be support. They're going to fight to keep this support line. This is a big one. This one breaks, you're going down to the lows on the chart. Very possibly these, all right? And I'm just going to draw in a couple support lines on the intraday level. All right, if that line gets broken, these will be tested most likely, all right? And I'm doing it as quickly as possible because I have a lot to cover today. And if you even go back further, there's more down here stretching back to the 24th and the 23rd, but I don't really have time to go into it. But look at how you get that bounce off this trend line, and it's continuing. You're going to have resistance here at the 50. All right, after that, you'll have minor resistance coming into play right here, which will coincide with the 20 as the 20 slopes down in the next candle. And then after that, I'd be shocked to see if the market can really recapture. If it does recapture, then all of a sudden this changes from a bearish chart to a bullish chart again, in my opinion, after consolidation, of course. All right, right now, from this move down, this is a bearish move and possibly setting for a breakdown from this point. Again, if they hold this, I have a lot of faith that the market will see more upside, but as of now, this is a bearish flag pattern initiating with resistance right here and then right here at the 20 in this line. So keep that in mind. Now, why did we know that this top, all of a sudden we have the bottom trend line in this market? How did we know this double top was a triple top? How did we know yesterday, and this is something we talked about in the chat room, folks, all right? How did we know when we didn't even see this portion of the chart? Like, let me move it back. All right, yes, this is yesterday trading, right? So you're seeing this more. How did we know this area, it was going to break the high and go up to the highs up here? I'm going to show you exactly why. All right, you have to use your trend lines here from the 23rd. You go back to the 23rd, you take the gap up, extend your trend line all the way over exactly straight, and you're going to have to actually extend it even more so. All right, and we'll see if we can put this right in here. There we go. Going to today. You take that and extend it all the way over, and look at that. So it goes right into that line, guys, perfectly. And then again, you test that double top today. And look at the WV pattern that happened yesterday. And I talked about this in the Research Center videos, where all the premium subscribers get all the hardcore analysis really live on the daily chart. We only cover the intraday for obvious purposes to not give too much away what we think the market is going to be doing. But nonetheless, WV pattern, bullish V pattern to completion at the double top, pullback, double top test, failure, and now all of a sudden you've retraced all the way back to this lower trend line. Now there's another trend line I drew in yesterday which showed some parallel lines focusing in on the chart, and I'm going to draw that in as best as I can as well. Goes back a little ways now, though. That's the only negative to it, but nonetheless, take a look. Take the high there, draw it right to that high, that secondary high on the day, right here, and notice the parallel lines you're dealing with. Alright, and this is, again, just so important to understand all these patterns on the videos and so forth. So all of a sudden you have this pattern. Now, notice how this chart, again, you gapped up and you sold right down into it. You didn't really break below. You never confirmed that move. You pierced it, and then the next candle shot right back up. That's telling you there's a springboard support line right there. So you shot back up, retested the high of the day, came down. Where do you find support? Yup, on the upper line of that symmetry or that channel. This channel, between this channel and this channel, and you can see it stretching all the way back here. Between those levels. Here's you're going to bounce. Secondary bounces, where do they come into play? First of all, let's talk about the low pivot on the day on the sell-off at the open from the gap up. Draw the bottom across right to there. There's your pivot right there for that little bit of a bounce. Where does it bounce back to? The higher end of that channel. This is telling you you've recaptured this channel, and more than likely you're going to test that low. Why? Well, because you broke back in the channel, then you bear flagged it right to the 20 in that upper channel, and you failed. And that was a bear flag right there. You started to sell off. That's ultimately, once you recapture a channel, more than likely you retest the high after you break below it, and then test the low part of the channel. What's going on? A retest, exactly as we said. Test the high, test the low. Now you're getting this little bit of a bounce. Okay? So obviously you have this low pivot right here from the opening pullback, and that's why you have that tail piercing and then support in the bounce. Then in addition, how do we know that this bounce is coming? Well, take the low from yesterday, this little sell-off, gap fill. Gap fill is always a key player. And just draw it right across. And there's your low. The tail hits that exactly, mirroring the 200 moving average as well. You get another bear flag pattern formation. And then all of a sudden, you fail, and where do you go? You pierce the 200 all the way to the downside and come and test that lower trend line, which obviously is support. And those of you that watched yesterday's video know that that's a key line, and I would hope you guys keep it intact all the way through. Very, very impressive on the technical side of the market, guys. The charts are really acting beautifully to support resistance lines. Trend line analysis is working beautifully, as you can see, all right? So very, very interesting stuff. A couple other things. I want to go to the 60-minute. You can see the 60-minute, guys, what happened here. Well, here's the low put in on Monday. Here's the move up on Tuesday. Huge move up on Tuesday. The kind of the mixture day on Wednesday, Thursday, today. All right, pullback. And what have we seen? We saw a test of the 50 moving average here and a pullback to the 20. So don't mind focusing on that. And just so you know, remember that double top going all the way back to the 23rd? Well, here it is. You can draw that in beautifully on your chart, like there. So that's your resistance line as of now, and you've pulled back off of that again, coming all the way down. Trend line-wise, here it is. There's your trend line. I mean, it can't be more obvious than this trend line right here. This breaks, and this is why I said on the video yesterday that as long as we maintain above this trend line, and I drew it on the 60, I drew it on the intraday too, and I'll show you, go back to that, this trend line right here, as long as we stay above that, going back to the 60 here, this market should go higher, and it has. Look at the angle. Up, up, up. Okay, now the question is, I said if it breaks, we could easily go back and test the lows. The key lows on the 60-minute are as follows right here. There's another one here. And these are a little more major support lines because the 60-minute always trumps the 10-minute intraday. Every bigger time frame always trumps the next one. But this is what you're looking at here on the downside. All right, so watch these closely. On the upside, you're going to look for a retest there. I'm not going to go into more details on that side because ultimately that'll be tomorrow's intraday video if we test it, or tonight's for those premium subscribers at the Research Center that really want to know more what's going on in the daily. And keep a watch of the Pro Trader watch list. We closed out a bunch of those financials. And as I mentioned, or if I didn't mention it yet, guys, just a note, I closed out my oil trade today upwards of $45 a barrel from $35. And a lot of the financials I've unloaded here on this morning's pop-up, knowing that things were getting overbought. So all the Research Center guys knew when I entered and when I was accumulating that late last week. obviously, and they know that they'll know, obviously, that I've unloaded and so forth. All the chat room guys know as well. Have a wonderful day, guys. Hope you find these videos very, very useful. We'll talk to you tomorrow.